FM Global Logistics is an international freight service provider operating in 127 countries. The Malaysian operation is the biggest revenue contributor, accounting for about 70% of the revenue in 2024. The group has two main operations: international freight covering air, sea and land services, and domestic logistics offering warehousing, distribution and e-commerce fulfillment. Over the past 12 years, revenue grew to peak in 2022. However, declining global trade and lower freight rates caused a drop in revenue for 2023 and 2024. The profit after tax trend followed the revenue pattern. The drop in profit in 2020 was due to losses from an associate and impairments. Gross profit margin has also been impacted. Both operating and capital efficiencies have declined since 2013. While some recovery was seen after 2020, the 2024 results are still lower compared to that a decade ago. Returns also did not show any improving trends. Return on invested capital and return on equity were lower than the respective cost of funds. The cash flow return on invested capital was also volatile. Shareholders' value was at best maintained. Compared to its Bursa logistics and transportation companies, FM Global is among the larger ones and achieved one of the better revenue growth. When I look at the company's performance based on four metrics, you can see that its trend lines were relatively flat. This meant there was no improvement in capital efficiencies. Apart from the earnings per share, the group performance did not stand out relative to its peers, but it did better than its peers when it came to shareholders' value creation. I would rate its overall performance as average. FM Global is financially sound, generating positive cash flows. It has a good capital allocation plan while keeping debt level manageable. The company has an asset value of 77 cents per share compared to its market price of 63 cents. The earnings value is 70 cents per share. There is not enough margin of safety under both bases. The group is a key logistic player. However, it must address declining efficiencies and work on long-term growth and profitability. At the same time, there is not enough margin of safety. It is not an investment opportunity. The information presented here is for educational purposes only. For more details, read the blog article. Thank you.